Hello everyone, welcome to Mira Asset Sharekhan's quarterly results preview. In this video, we break down how the capital goods sector will be performing in Q3 financial year 26 and most importantly, what it means for markets, stocks and investor. So, now we'll talk about overall sector view. The capital goods sector continues to remain comfortably positioned going into Q3 financial year 26 with strong revenue growth visibility supported by healthy order books, strong balance sheets, and favorable government policies. This reduces earnings uncertainty and keeps medium-term outlook stable. Now, let's talk about the sector revenue growth, execution and margins expected for the quarter. Revenue growth for the sector is expected to remain growing at 16% year-on-year, led by execution of existing order books, while product-based companies are likely to see stable growth. Now, coming to margins and cost. Operating margins are expected to remain largely flat at 11.6% with a marginal improvement of 38 bps year-on-year. There won't be much improvement in the margins given the fact that commodity prices are exorbitantly high. The increased raw material prices would lead to margins to be key monitorable in the current and coming quarters. Margin expansion is not the main trigger this quarter. Execution quality and cost control will matter more for the stock performance. Continuing with CAPEX cycle and order inflows. Government CAPEX remain healthy for 9 months financial year 26, which is driving order inflows. Private CAPEX remains muted and would pick up in coming quarters. But we see select pockets like thermal, building, factories, data centers seeing a pickup. Defense remains in focus as DSC has approved acquisition proposals of Rs 79,000 crore, leading to a total of 3.3 lakh crore of proposals year to date, providing stability to prospects of defense companies. Order inflows continue to be strongly supported by government CAPEX, especially across defense, railways, renewables, transmission and distribution. L&T has been in focus, winning a larger order for an ultra-mega project in hydrocarbon segment. Also on the export side, L&T has been gaining huge traction in order inflows from international geographies, specifically from Middle East. Now, key monitorables would be order inflows, order book, guidances, export orders and margin guidance will be key monitorable thing. Now coming to power segment. Expected performance for Q3 financial year 26. Power demand picked up in December after lull period in October and November due to an extended monsoon and moderate temperatures leading to mixed performance by the companies. While some companies are expected to report stable growth, others may see pressure due to company-specific factors. Our coverage universe is expected to report a revenue EBITDA flat growth of 1% and 1.4% year-on-year respectively. So what would be our preferred picks? Given the current setup, preference remains with the companies that have stronger order books, execution capability, and diversified revenue streams. Preferred picks include project-based companies like BEL, HAL, Kirloskar Oil Engines, Triveni Turbines, KEC International, Kalpatru projects. In the consumer electrical names, we like Amber Enterprises, Polycab India, and KEI Industries. And in the power space, we like CESC, NTPC, and Power Grid. So to sum it up, for capital goods sector, it's about execution over excitement. We expect our capital good universe to continue to perform well, driven by stronger execution of highest ever order books. Order intake was encouragingly well in all the key sectors like power, metro, railways, T&D, data center and automation. We continue to like companies with a well-diversified order book and revenue base, marginal tailwinds and reasonable valuation. Stay tuned for more quarterly results preview from Mira Asset Sharekhan. Thank you.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.